running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, Quasar Markets Live. Hope everyone had a great weekend. I can tell you what did not. That is crypto. Man, what a beating over the weekend. We've come straight down to even further down than where I had put my line in the sand, so to speak. We have moved back above it, but as you guys know here, we had been looking at that 76,600 area as a solid level of support. You can see we broke through it overnight. We have regained back through it. But that, and the reason I am starting with crypto is that sort of started the sell-off that has now moved into the rest of the markets. So let's take a look at everything. Starting it off, the market react to this Kevin Warsh nomination seems to be a big one. Traders seem to be treating this as less dovish bias and more of a higher for longer risk. And that has hit duration, gold, and the frothiest AI names for sure. Let's get into it. What is moving up this morning? And you can see here VIX, the volatility index, VIX, is now up about 7.8% this morning. So traders are hedging their bets. They are watching for volatility here. This is actually down off of the lows of the morning. It had been above 20. So you can see that big gap up that we saw on the VIX. Again, the VIX gives us a risk on, risk off gauge. Right now, not looking so strong. When we also look into the dollar index here, it is moving up throughout the morning here. That is helping, but it does, again, king dollar means what? Stronger dollar is worse for risk on assets. Good morning, Ida. Hope you're having a good day there, Dr. Spector. We've broken back above that key level Steve Flanagan set for us here last week. So we did regain that 37.25, 37.27 handle here on the dollar, moving back to the upside. But again, if the dollar goes up, what does it mean? Risk off a little bit. So first two things we've looked at so far have us thinking maybe we're going to see some risk off across equities. Let's take a look at rates. Rates actually give us a little bit of breathing room here. We do see the 10-year down about 17 basis points, 30-year down about 16 basis points. But we do see on the other side of that short-term duration shown by the 2-year has ticked up slightly. So treasury rates not really telling us too much today at all. So not really giving us a good gauge. And when we look overseas, it's been a mixed bag. Asia has had a tough go of it last night. That was when we really saw the next down move on risk on assets like Bitcoin, gold, and silver. And the Nikkei down about 37 basis points. The Hong Kong index down 2.23. And the South Korean stock market actually hit their circuit breaker down 5%. And was halted for trading. So Asia got hit pretty hard. On the other side of that, we do see Europe bouncing back up about 40 basis points here. So, you know, it's been a tale of two stories so far this morning. It's a little bit of strength coming out of Europe, big weakness out of Asia. And then commodities clicking up, but have been weak over the week, you know, overall. Taking a look at gold, we know broke to 5,600 here back on Thursday. Now trading right around 4,700 after hitting a low of 44.02. I think we hit that right about 1:32 o'clock last night. And we've bounced back, but again, that bounce back, similar to what we're seeing with crypto, Failing at key resistance here. So I'd be a little bit worried here, traders. We are failing at key resistance so far on the commodity futures that I'm watching. Silver, similar setup here. You can see after breaking to 121, the crypto type fall here all the way to the bottom of our daily linear regression. And we can see it has bounced back a little bit, but again, short term. Chart shows a little bit of a weakness here, falling below key EMA handles and moving back to the downside. So not liking what I'm seeing so far. Need to see sort of immediate. We're getting to the area where we need to see a bounce this morning, or we risk a pretty red day. And if we look at futures across the indices, the best so far is the Dow Jones, only down about 9 basis points. And you can see it has been moving up over the morning, right at my key resistance right now at that 48,965, 49,000 area. That's the high of the morning. We'll see if we can get a break one way or the other. Again, used its 50-day SMA as some nice support here earlier, and the bottom of linear regression. Let's see if we can get a move back on the daily channel. But we have seen on the candlesticks here multiple days of lower lows and lower highs. That keeps us in a still a negative. To me, it's a prove it market. S&P down about 46 basis points. Same thing again, bounced back up off the bottom of that linear regression, regained the 50-day simple moving average, and we've seen strength click back in here. Tech shown through the NASDAQ, same type of situation, although here rejected by the 50-day simple moving average and moving back a little bit to the downside. So crypto, metals, and the NASDAQ seem to be trading with a pretty strong correlation today. S&P and Dow sort of doing their own thing off of that, so we'll keep an eye. On the commodity side, I also have to mention, with talks out of the White House and the president that things are moving along in the right direction in the Middle East. We do see that oil's pulled back about 5% also here this morning, with WTI threatening to challenge back that 60 level. So we'll keep an eye on that all day also. And if we look through the sectors of the S&P here at 840 this morning, we do see that utilities have popped up a little bit now, up about 32 basis points. And the early morning movers, or the ones that at least were holding on to the green, because none of the sectors are really outperforming here, we do see up about 20 basis points on XLV, which is the healthcare sector. Financials are up slightly, real estate up slightly, and XLP, which is consumer staples, up slightly. So it's sort of, a sectoral shift back into defensives we're seeing in the pre-market. But, we've seen these things shift. We do have earnings that are going to be going on this week. Earnings are a big part of the play. So we'll keep an eye there. Let's take a look at the individual movers so far this morning. And why don't we start in the food sector? We've got Tyson Foods up about 1% here this morning. They did rise after their earnings. The chicken and fish provider and meat processor posted a better than expected quarterly earnings and revenue beat. They're up about 1% here at 66.01. The company posted adjusted earnings of 97 cents for its fiscal first quarter, above analyst estimates there by a few cents. And they did have 14.3 in top line revenue. That was up about 5.1% from last year and did beat estimates. Their chicken division saw about a 3.7% growth in sales volumes. They did say prices are roughly flat from a year ago. The chicken and prepared foods accounted for the bulks of the company's earnings. Its beef business, however, it posted an adjusted $143 million losses as average prices soared at 17.2% from last year. So beef, expect, what your takeaway at the grocery store is get ready to eat more chicken, and beef's probably going to continue to go up in pricing. The U.S. beef cattle inventory fell 1% last year, according to the January 1 estimates by the National Agricultural Statistics. So that is the lowest level since 1960, and again will put pressure on that industry for sure. Oracle having a nice little morning here, up about 3.49%. And this is an interesting one because what is this up on? It's up on a fact that they want to raise some money. Usually we've seen this as a negative. Market's taking it a little bit differently here this morning. Oracle plans to raise between 45 to 50 billion this year as it looks to fund its huge bet on cloud computing to power artificial intelligence. About half of that debt, half of that will be in debt, excuse me. So we'll see what the market ends up thinking about this by the end of the day. But so far, its first reaction was negative, and then since then, it's been climbing up. Oracle intends to complete a single one-time issuance of investment-grade senior unsecured bonds earlier this year, the company said in a statement. Oracle had about $100 billion in long-term debt as of November. It's a hefty borrowing rate for sure, and it has turned its debt into a barometer of the market belief in the sustainability of the AI surge. So we'll keep an eye here on that. But we do see Oracle up about 3.64% on that. One of BigBeat's favorite companies, mine also, is, of course, the mouse himself, Disney, trading, here this morning. Excuse me. Let me get a little drink. Trading down about 1.42% after their earnings. They reported an adjusted earnings of $1.63, down, almost 13 cents from the same period last year. And they posted revenue increase of about 5% versus a year ago. Analysts surveyed by FactSet had expected them at adjusted earnings of $1.57 on 25.7 billion in revenue. So they beat the goalpost, but the goalposts were moved a little closer, as BigBeat sometimes tells us. Their CEO, Robert Iger, said, "We are pleased with the start of their fiscal year, and their achievements reflect tremendous progress that they have made. They delivered a strong box office performance in the calendar year of 2025, with billion-dollar hits like Zootopia 2 and Avatar, Fire and Ash franchises that generate value across many of their businesses." They did say that Disney Plus and Hulu streaming services grew 72% from the same quarter a year ago to 450 million, well above the estimates there. Shareholders had been keenly focused on Disney streaming growth. As we know, linear TV continues to see a decline in viewership. The House of Mouse will no longer report subscriber additions, so analysts will start looking for other metrics to determine the strength in that sector. Their direct-to-consumer revenue was expected to be a bright spot. It did perform pretty well, and their entertainment revenue grows 7%, handedly beating some of the expectations. We do know that theme park attendance did actually come in light. So they highlighted a Disney's 4% decline in domestic attendance. So I'll have to ask BigBeat about that here at 9, because we both thought that might have been an actual positive for them, and their earnings looks like a negative. Some analysts have come out with targets already. We see a few of them around the 135 price. And then they did have good news across their cruise line, saying that their new Destiny ship that launched in November is seeing strong sales, and that could help also. And we do know that on top of these financial results, shareholders are looking for more updates on who will be replacing CEO Bob Iger when he steps down potentially at the end of the year. I'll ask BigBeat if he's got any insights there and who he thinks does that. Looking at the other movers on the positive side, again, as the White House talks about the fact that they are going to stockpile and, sort of back stock some of these metal companies. We see TMC up 8.5% this morning, USAR up 7.36% on that news. Also, there has been some other pop back names here. SanDisk, which got hit really hard after popping off to set 676 on its earnings beat last week, is up about 8% here after its fall from those highs. And on the other side of that, we see the crypto adjacent name is really getting hit hard this morning. MicroStrategy down about 7.5% in the pre-market, and depending on what Bitcoin's price is at, they are either close to or below their cost average on their Bitcoin. So that's going to be all over the news. Again, I think it's a lot more fluff than real news there. They're not at fear of having to sell. Either is, it was interesting. I was curious to see where Bitminer falls in on this. Saw Tom Lee on CNBC this morning. Man, not afraid to face the fiddle, so to speak. Was on TV already. He made it clear that Bitmine inversion holds no debt. Everything is bought for and paid for. So they have no threat there. So the biggest of the Ethereum digital asset treasury companies not at risk of any problems there. But that does have all those names in that area, data centers, Bitcoin mining companies, all getting hit pretty hard this morning. We also do see some of the energy names with the drop in oil as geopolitical tensions unfold a little bit, have been dropping also. Devon Energy down about 3% this morning. Halliburton was down. And healthcare is still under a little bit of stress here today as Humana down about 3%. They will be going into earnings later this week. Actually, that's next week. Taking a quick look at our Mag 7 this morning. NVIDIA down about, well, let's start with the biggest laggard on the group so far. Tesla down over 2% this morning due to a significant drop in their new vehicle registrations, especially across Europe. It was down 42% in France and 88% in Norway. A lot of EV numbers came out. I will say it didn't just hit Tesla on the side of the Asian names or Chinese names in there. NIO was down earlier. Down about 1.49%. Lee was down also. So EV was getting hit in general this morning, all the EV car companies. So, and NIO down. Whoops. And Lee down about 1% after being down 3.65% on Friday. So again, those are where we're seeing weakness. There isn't a huge amount of strength anywhere. Our advanced decline showing us down about 1,200 here. Again, it's come off of the lows of the morning. So we are seeing a pump back, moving in the right direction. But what does that mean? So far this morning, we're set for about 1,200 more stocks to open in the red versus the green. And we still see our tick, which shows basically moment by moment, is there more buys or sells? Still fairly negative here. We had a nice little resurgence there for a while, but most things do see like they're topping off. Getting back into that Mag 7. So Tesla down 2.5% here so far. We do see NVIDIA, and that's been one of the big also drains on the market overnight. and over the weekend has been sort of the unwinding of OpenAI and NVIDIA. We had seen the discussions back, maybe now probably close to a year ago, that NVIDIA was going to make a huge, huge, huge investment into OpenAI. But now, when pressed a little bit on Saturday, CEO Jensen Huang said, maybe not, maybe we will. We're regaging everything. It wasn't a binding agreement. It was more of a, soft commitment maybe. And what we do see is that also had SoftBank. Let's see, I don't want to say that, I don't know if it's still down. The clearest play into that really is SoftBank. That doesn't work for, let's see if I can find something here. Sorry. That's a pretty good gauge for this is total SoftBank, depending on where it trades. It trades on foreign markets, and you can see down about 4.58% here. Probably the largest investor into that area. So it shows you again just the weakness we're seeing. We do have Google down about 60 basis points here. They will go into earnings here on Wednesday. So we'll see what happens there. But Google down about 66 basis points. Microsoft continuing to be weak after their earnings last week, down another 70 basis points so far. Apple down about 80 basis points. They had seen some relative strength on Friday after their earnings came out late Thursday. So that's pulling back a little bit there. Apple, again, the news or the weakness there was really directed around their connection or their the increased costs there that they're going to face over their memory chips for sure. We are about 5 minutes from the top of the hour here. Amazon also down about 50 basis points so far. And Meta down 1. Sorry, let me answer one question here. Okay, traders, what are you guys watching this morning? What are you guys thinking? Mr. Flanagan, how are you doing today, sir? Good to see you up here this morning. We'll see you here in just a few minutes. And again, markets are slated right now to open down. Dow has come close to flat on the day. S&P down about 40 basis points, but, off the lows of the morning. Same thing with tech, with the NASDAQ at 25,502, definitely off of lows of the morning. So we are seeing things try to bounce back. Bitcoin trying to get back above that 78K. That is the area it needs to, maintain today to have some positive moves and show that maybe we can get some strength going today. Markets will make some pretty rapid decisions here after the open for sure. And again, earnings is going to be on tap all week. Do want to point out we still have Teradyne on tap today, Palantir on tap today for earnings. Wrong screen there. This is the one I want. NXP Semiconductor will be coming up this afternoon today. So after the bell today, we still got a few big ones ready to go. Palantir, Woodward, NXP Semiconductors, Rambus, RMBS, which has been on a big move lately. Simon Properties will give us a good sector into real estate. They are a big mall owner and real estate company. And then Teradyne also after hours today. So earnings, again, will be a big part of what we watch here today. And that we keep an eye there for sure. Okay, we are getting close to the start here. Okay, traders, sorry about that. Got so much here, trying to keep an eye on it, trying to see what we got going on. A little bit of a squeeze seeing up here on the crypto side. So Bitcoin trying to make a little bit of a run here back above 78. So we are seeing a little bit of a liquidation squeeze here on the perps. We'll see if we get some movement here that matters. Got a hold over this high of the morning is 78,346. But would need to see a strong move here for us to think that the path of least resistance is back to the upside. And again, Mag 7 under strain here, metals under strain here so far to start the day. So risk off across the board seems to be the way we're looking at it. Earnings will be a big part of what we watch today to see what does pop. Can Disney start to give us some strength? But they're down 1.9%. Tyson's that had a good pop during earnings now down 1.9%. So we're not really seeing any of these earnings, even no matter how impressive they might seem to be, they do not seem to be pushing the needle and pushing the market back up at all. Definitely pressure across the board here. Markets don't seem to be happy with the president's selection of Mr. Warsh. Seems to be putting stress, and from there we've just seen continued push to the downside. I do see that our big man here, BigBeat, is coming into the room. We'll give him a second to get himself set up, but we will get him in quickly here to see what his view is, find out if he's still short silver, and what he is looking at for today across the markets. Again, advanced decline, pretty weak here, but moving in the right direction. We're down about negative 1137 here so far. We have seen on the indices, the Dow Jones go positive on the day. So the Dow has gone positive, the futures at least, and VIX is cooling off. So let's get him in here to tell us what he has for us to talk about today. Coming into the room himself, the man.
When markets move, Stephen E. Orr takes the chair. From the White House to Wall Street, he's spent decades at the intersection of policy, markets, and real capital. And he's seen firsthand how institutions use data behind closed doors. Now, as founder of Quasar Markets, his mission is to pull those signals into the open so everyone can see what really moves the markets. This is Stephen E. Orr, BigBeat on Wall Street. Let's filter the future live.
BigBeat, how we doing this weekend, my man? I know you're loving silver. You're loving the reaction on silver. How was your weekend?
Good. Look, we got that pullback that I've been screaming about. We got it, and it was as reactive as I expected it to be, maybe even more, to be honest with you, because it was a big pullback. But I'm no longer short silver. I'm actually long silver now. So
okay.
I think we have a pullback to the other side. And I've said this a million times that the problem in this market is that we're oversized, right? The over leveraging, the not really understanding fundamentals in the market. It's really pushed another level here, especially here in silver. And so for me, wow, it's silliness squared. That's what I'm gonna call it. Silliness squared.
I love it. I love it. Yep. Came right down to its 50-day MA, bounced up pretty nicely, gold and silver there. Movement's been a little bit uneven so far this morning, but both of them trying to recover a little. I'm assuming that's a scalp on silver, or is that a long-term position?
I'm not sure yet. I don't want a bad position to become a position. Does that make sense? I want this to be something that I'll make money on. So obviously that's why we're doing it. But the violence of the pullback and the violence of the upside, it just the thing is, if the narrative to the upside was, oh, we need more silver, we need more gold, we need all this, and we don't have enough, and there's, why did it run to 120, right? And it's because they just didn't know what they're doing. And they just started buying naked calls and naked puts, and it was nuts. So will there be a flip back to that? No, but there is a target now. Then that target's 121. Will we get back to that? No. Fibonacci sequence says we'll probably get to about 95 to 100. That's where I'm probably going to start pulling it off at. So timing to me means that, do I wait it out for a month? Maybe. Do I wait it out for a few days? If it goes back that fast, yes. So that's kind of my thought behind it.
Okay, that makes sense. So, Steve, what's causing this downfall here? Do you think this is the Kevin Warsh thing? Is it that big of a deal? That's what everybody's pointing to.
Kevin himself is very attached at the hip to the president. But what happened was that they had read some position papers when he was Fed governor. Now, remember, this guy was a Fed governor, the earliest in history, right? The youngest Fed governor ever, when he was appointed the first time. And when you look at him as a person, has changed over the years, and you can't look at what he has done in the past, and that's what he's going to do in the future, because now this one he is tied to the hip of the president. So I think people are making a big assumption here that he is not going to quote lower rates fast as he thought he could. The problem is still the same. All right, so it's 10-2, as we all know. Was it going to be 9-3? You still got other governors on that board. You've got to change their minds, and they still have a vote. And it's because you're the leader doesn't mean you're going to get the way you want. So I think there's a little bit of rationality amongst institutionals taking advantage of that, and I think they were right. But no, I think that the problem here was that the betting that Kevin Warsh was going to be tied to the hip as much as Trump is, I think it's pulled back a little bit. So here's what I think. If I'm looking at silver, I think we'll probably get to 85 by Friday. And I think we'll probably be maybe gold, maybe get back to 5,000. But those are numbers, and I don't really care about the numbers right now. It's all about the narrative, and the narrative really hasn't changed much.
Okay. On the stock side, Steve, the Mouse reported this morning you are always a fan of Disney. What were your takeaways from the numbers? Anything there?
I mean, the thing I like about Disney, I like Disney in the fact that they're allowing Sora to use Disney pictures. I think that's part of what we heard in that meeting. I also heard that Iger is, we all knew he's leaving. We knew this is the third time he's left, I think, Disney. But this time I think he wants to leave. He's tired. He wants to have time with his family. He just, having that Bob Iger's name attached to Disney is what kept Disney as good as it is right now, stock-wise, I should say. But the company itself is doing very well. The sales at the parks are doing very well. We just haven't seen any new movies. Where are the movies at? But people are going to the Disney Channel. They are going to Disney Plus, but I haven't seen any new movies on Disney Plus. And that bothers me. And so they've had to go to outside influence, meaning Hulu, on things that they had made investments in, which I think is smart. But now you got family plans, I guess, which will help. But they need to actually have bigger reach than just Mickey Mouse now. It's time.
Yeah, without a doubt. You know what? Where you and I were a little off. Theme park attendance was a concern that they highlighted. 4% decline in domestic attendance.
Yeah.
So it that was but we both I at least think that's something that will bounce back, right? So that to me was almost a positive. If you got these good numbers out of some of the other segments, and that segment isn't really bounced back. They also pointed to the cruise line as a positive boost moving forward as they launch their new Destiny ship in November. So I think things interesting there. Any take for you on the sort of front runner? I believe it's James Gorman, maybe as the CEO or
I
somebody
like that.
there.
That's a good call. I will say that in the parks, if you look at domestic parks, we're not up that much, but what, 1.3%? I think I'm looking at Magic Kingdom itself, 0.7%. Magic Kingdom's been around since the 70s. I understand that. Yeah, there has been some push up. Epcot up 1.3%. But if you look at it from the perspective of international has really risen. I mean, if you look at Tokyo Disneyland and Shanghai, they are in the top five top parks around the world, and those numbers were way up. I will also say that, and you can look at natural gas prices, that the weather also affected the Disney parks in Florida as well, and some in California, because they did have some weather in California. But the cold, people didn't want to go, so I totally understand that, and it could affect January and February numbers too as well going into the first quarter.
Yeah, absolutely. Hey, Steve, what are you looking for tonight from Palantir? They're probably the biggest one left on the radar today that could move the market one way or the other. They'll have earnings after the bell today.
So I think Palantir, look, I liked it at 30. I did not like it at over 200. I think 207 was the high there, 52-week high. We already know what they do, right? They are the backbone of AI for the government, and that's not going to change, right? The government still is going to spend money, especially this president on AI and in blockchain and all that. But this is we have to look at it from the president's perspective. We went into this country this year in 7 hotspots around the world, and we went. There weren't 7 hotspots when Trump took over. So that need for data around the world is a lot bigger, and I think they're hiring. Palantir's hiring. We know that, so we know they're growing, but they're being very, very coy about what they're building over there, which should be, because it's the Department of Defense. Sorry, it's not Department of War to me. What they're thinking about, right? So the thinking about Russia and Ukraine, and how that's going to be affected, right? So where do we put our military objects, dome, things like that? So Palantir is part of that process. They are the process, I should say, and that we're going to see good numbers, but numbers are based out of contracts from the government, and those contracts are already seen. So unfortunately, I don't think Palantir's are going to go, ooh, look at these big numbers. I want to see guidance. What else outside of the U.S. government are they growing at? That's what I want to see. That's what will tell me the difference.
Absolutely. Steve, a channel check on our food came through today with Tyson's Food and their earnings. They are, I don't want to say it, they were up, down, then up. They are up about 0.5 percentage point here. Strong on chicken. Beef's going to be a problem, buddy. Inflation's coming across the line. Herds down another 1% this year. Lowest level since 1960. Anything you saw there that surprised you one way or the other? I mean, inflation's going to definitely get hurt by this.
The question that I have, and I had some friends over for the weekend, and weight loss drugs were talked about a lot, actually, which was interesting to me. It went from, hey, how's it going, Steve, with the weight loss, to, hey, I now know somebody who's on the weight loss drugs, right? So what are they eating? They're eating steak and they're eating chicken, they're eating meat, but they're eating higher quality and less of it. So that becomes a problem for companies like Tyson Chicken, who makes chicken wings, things like that. Is BW3s or Buffalo Wild Wings, are they pushing up? Not really. And so that becomes a problem. Now, we haven't gotten through the biggest day of chicken wing sales in the month here, and plus a year, which would be the Super Bowl, right? So I want to see that. But right now, I'm not liking this chicken numbers. I'm not at all. I told this to begin with. I don't. Lower quality restaurants I saw over the weekend. Another Fridays had closed near me. So there's, those kind of restaurants are the ones that push out the Tyson's chicken too. I'm not seeing it.
Yep. Steve, of course, all the crypto names getting hit here. What do you think with Michael Saylor, man? His Bitcoin holdings went below the cost average there.
They did. I mean, you're going to have to get it down 25,000 before he becomes liquidated, right? And he is very bullish. I'm not unhappy about this. I want the price of Bitcoin to go up, but, and I had this conversation over the weekend. Again, why is it when things are on sale, people just can't seem to buy, but when things are high, there's a FOMO, like a FOMO on silver, a FOMO on crypto. When Bitcoin's at 120,000, everyone's excited. But they're not excited. If you like, as Peter Thomas said over the weekend, if you liked silver at 121, you're going to love it at 80. If you love Bitcoin at 120, you're going to love it at 70. I mean, I think we're almost 78,000 again. I think the fear gauge has gone too far to the left now. The fear gauge of being too scared. There's more than just fear, right? The fear is saying, what are you afraid of? Oh, they're afraid of going lower. Well, okay, but if you're going dollar cost average, is a damn good time to do that. So when I look at the next, what's the path of least resistance? Is it now to the upside? Yeah, I know there's a wall of sailing, but I'm okay with this because it looks like to me that there was a lot of whales, OGs at the very beginning, who don't like this Clarity Act. And the Clarity Act is saying, okay, well, if you're a bad actor, we're going to go after you. Well, they don't want to be part of that system, right? So we'll just move it to another exchange. Well, those exchanges, nobody, you know them better than anybody, Howard. They're starting to go to those bigger those other exchanges, and Binance seems to be the one that's selling the most, right? So, no, I don't think so. Coinbase seems to be the one picking up that slack as much as they can.
Yeah, we've seen some decent starts of the turnaround. Not holding 78 here is a bad sign. Probably challenge 74 here, maybe over the next 24 hours, even a little lower. But we are getting close to that area. This was it. This is the capitulation. We'll see a little bit more probably. And part of that is there's just too much knife catching right now. That's, again, making it a little bit of an easy pickings here. So they'll do that. The key is, major buyers. But what I like to see, the company I was more worried about, to be honest with you, was going to be, Tom Lee's BMNR, who bought all that Ethereum. But he was on CNBC. I give the guy credit, not afraid to get in front of the crosshairs at all. I give him all the respect in the world. But he made it clear they actually have no debt. They bought it all, with cash. You know what I mean? So he's like, we don't ever have to sell. And we're not. So, that was great to see, because I am more worried about those Ethereum digital asset treasuries, because Michael Saylor's bought on the way up and on the way down. They all bought towards the top.
So that's why I'm not scared either, right? I didn't buy any of my Bitcoin on debt, margin, or any of that stuff. That's the difference, right? When you buy Bitcoin, to me, it's about, you got extra $500, you got extra 10,000, whatever it is that you're level with. You just pick some more up, you dollar cost average. But what's happening is we're still allowing this 100 and 300x. I mean, that's not as bad as it used to be, but the wild west is starting to die down.
Well, Steve, remember that just hit. That's why silver just did what it did, because they're trading them on these perpetual futures on hyperliquid, $1 billion of volume a day on Coinbase, $1 billion of volume a day. That's part of the issue too. Is that, first of all, there's a lot of apathy in general on the crypto side. And then those crypto bros are all jumping into the silver trade.
It's funny. I mentioned this over the weekend, and I think it's a good point for both of us. And you're right. It just blows my mind how many masters of the universes there are out there that were back. Remember during COVID, everybody was a master of the viruses. Everybody understood how the virus worked, and how so many new doctors. It's just amazing. It just blows my mind how many brand new .com bubble people they just knew the world. Well, when I was looking at silver, I'm like, you don't know anything about the metals market. What the hell are you talking about? You're making this stuff up. Oh, well, you know, they don't have enough in Peru. No, it's Peru and Mexico. That's where the
and they'll just start making jewelry. They'll start making cheap jewelry. You know, it's like we said, you know, on both of them, on Bitcoin again, when people were just buying, you know, I was warning 76. I've been saying it for weeks. It's been on that chart. You know, that's, you know, it's not, we don't like to tell people what's coming, but you know, sometimes you can just see it, what's in front of us. You know, hopefully people will. With that being said, Steve, you know, before I take off here, what do you think? You know, do you think the dip's over on the stocks? Are we starting to move back up? It looks to me like the morning was the worst of it, or do you think we go right back into this, you know, quick little pop at the open and then it fades away?
Yeah, it's the first trading day of the year. There was still some switchover over the end of the month in January. And as January goes, so goes the year. I hope that's not the case. I don't believe in hope and luck, as you know. No, I'm not too worried about it. Look, we need some good news. Any kind of good news anywhere. Yet the news was about the Grammys and Melania movies. The good news is, and you'll have Mr. Flanagan on, make sure you ask, you know, obviously geopolitical tensions seem to be getting better. You know, hopefully you know, the Middle East comes into, you know, that could help a lot, I think, with things there. So, as I say that, let's bring him in and let me ask him myself. I love it. Here he goes. Mr. Flanagan, how are you doing today, my friend?
Good morning, gents. Hope everybody had a good weekend, and wow, get ready for another powerful week.
It is King Dollar starting to raise its little head again for you there. I saw her over the weekend. We'll see if that can continue here, Mr. Flanagan. But as I was saying, you think geopolitical tensions starting to come down? What are you feeling?
I think they are coming down, but I think that the curveball that the market has got a watermelon inside of their mouth is Kevin Warsh. And now everybody looking at him and saying, oh, my goodness, we got a hawk.
Yeah, it is crazy, isn't it? I mean, you know, again, we brought it up as soon as they announced him, right? I mean, you know what he said in the past. You know what his sort of view is. I just have that view, and I'm going to leave you with this one: is that is the rates aren't the only lever, and I think the interconnection between Treasury and the Fed is going to increase, and that combined sort of view is that we have a lot more things than just rates to use. So I'll be listening, guys. Let me know what you think there, and have a great day, Quasar Markets.
Yeah, you know, Steve, when you and I were first talking about Kevin Warsh and the other possibilities of who was going to be, we all said the same thing. I liked Kevin Warsh. I had him picked from the beginning. It reminded me of that movie with Kevin Costner when he was trying to pick who his football team was going to be, and he had written it out already, right? And it's like, this is the guy I wanted. He already knew who he wanted, and he let everything else play around him. But still, the guy that he picked was still the beginning, and it was Kevin Warsh. He brought Kevin Hass. He brought the Kevins. He made a whole bunch of stuff out of it, right? President Trump did. And he actually knew who he wanted, which was Kevin Warsh. It's a good pick because Kevin was the youngest person there. He's not quite an academic. He actually has real experience, and as you complain about, and I agree with that. But when you look at Kevin Warsh, a lot of people have pulled back data and position papers that he had written in 2008. It's 2026. He has the right to change his mind over the time. What do you think he is going to come out and say? Because he really hasn't talked a whole lot since this. And the Senate really hasn't been very receptive to him either, with 2 Republican senators now saying we are not voting for him, which will not stop the bill, because there probably will be Democrats who vote for a hawk, right? So give me your thought process behind Kevin, where he's at now, where he was then, and obviously the fact that he is not an academic.
Well, Steve, number one, you know, at 35 years old, or was he 36 when some of those comments that they're digging up were made? I you know, from my point of view, you know, yeah, I wish I could take back a lot when I was 35. So, you know, I just...
Me too.
I know, Stephen. That's why, I look at people and they're digging up these things, and I'm like, come on, stop. The man is here and now. He's reflecting on what's going on in the United States. And the most important thing that I think we can look at is that this man wants to put the Fed back in the quiet mode. He wants them to get out of everybody looking at words, and that is very important to an economy that can start, moving and clicking. He objects to the high balance sheet that the Fed has. Okay, remember, there's a pool of liquidity. It's not an infinity number. It's a pool of liquidity. And the more that the Fed is involved in it, the less liquidity is available for, let's hit it right where the nail goes, small business. So, yeah, get the Fed back into the background. I like that. Get out of the printing money, bailing out all the time. No. Let's shrink the balance sheet. And what does that do, Steve? The dollar debasement theory is right out the window. You're beginning to see that already. The man hasn't been approved yet, but if he does get approved, and I would think he will, the dollar debasement idea that everybody's got a narrative on is out the window. And if you look at the charts, again, Steve, I know everybody likes to talk about it. I know, I'm in the lone camp of saying that's out the window. But I traded when the dollar index was in the 70s. So, when I look at it today at our present levels of 97.40, I'm like, the dollar is not that low. And if it dips down into the 96, it's still a much higher level than in history. So I don't go by that theory of dollar debasement. I don't think it at all. I think you saw Scott Bessent come out and throw it out saying the United States has a strong dollar policy. I think they're getting themselves back where they want, and they're beginning to take the narrative, because that's what we all trade on today. What's the narrative? And I think they're trying to take control of the narrative.
And for those of you out there who were paying attention to Steve Flanagan, I made it very clear that I wanted to hold Steve's feet to the fire. Where are you buying the dollar here? And you made it very clear it was 96.20. There is where it is. And you just said 97.20. It's 97.52, Steve. Yeah. You absolutely crushed it. And I think that's part of it, right? And that wasn't a question mark of where are the charts, and not just, but it was also based on the Dixie itself and long term. It was based on geopolitical issues that we had debated here on the show. It was about the Fed, all the things we talked about, and you nailed it, right? You put that into a thesis, and that's why it works out, because it's not just zero DTEs and futures contracts and over leveraged people trying to make a decision here. You can't do that. In the dollar, it is literally the biggest asset class on the planet.
That's correct, Steve. $9.6 trillion trades in one 24-hour day. And for full transparency, I did take my euros back, as I talked about on Friday. My short euro trade, I did close that on Friday because I wanted to, as I said, manage my risk. I did go long UVXY, and I cut back my dollar. I kept my dollar Canada long, and I have kept a small dollar yen long through the weekend. I added to those this morning. I do like, I'm staying off the euro and the pound right now. I am looking to sell them again, because we have ECB on Thursday and also Bank of England on Thursday. Yeah. Both of them are expected to do absolutely nothing. However, it will be in the wording that I'm going to watch for. The numbers out of the UK and Europe today were mildly positive. So there is some momentum to perhaps, a position in those. But no, I like the dollar. And I think the closer we get to affirming the new Fed governor, once he gets through everything, and we still have to go through those Senate hearings, which are horrible.
When you look at Kevin Warsh, were you comparing him to Powell, or were you thinking about overall the last 5 or 6 chairmen?
I was comparing him to Powell because look, Powell has dedicated his life to this, and look where we're sitting here, close to all-time highs. The guy hasn't done a very bad job at all. He's actually done an okay job. I just think that he's missed a lot of opportunities in steering the monetary ship.
Right.
I would like a Fed to be more in the background.
So when you say he is steering the ship, what is it that you think that he missed? Was it just not lowering rates fast enough, or being behind the curve, as you and I have talked about? He's been behind the curve the whole time. And that to me, it feels like his hand was steady, but a little too steady, like he was grandpa as opposed to father here figure.
I think he missed a lot of key things. One, I really blame Janet Yellen.
I agree.
I think, when people say, oh, Warsh is going to be, closer to the Treasury Department, I don't think you can rule out the fact that when Powell took over, that Janet Yellen had an awful lot of chirping in his ear, because inflation is transitory was probably, I'm sorry, if you strike out with the winning runs on base in the bottom of the 9th inning and your team could have won the World Series in Game 7, everybody knows you for that. And inflation transitory was a complete fumble on their part.
Are you saying he's the Bill Buckner of the world here?
There you go. Right. Could be, Steve. But that was a big miss. And then I think the second big miss was thinking that, the inflation wasn't tied back to COVID and all the money, and thinking that you could just raise interest rates and stop everything. Short-term interest rates is what he controls. And they're not really, I think time has now proven it, they don't really control the rate of inflation that much.
Well, he said that his dual mandate was unemployment as well as 2% inflation. That's his target. He stuck by that. You got to give him that at least. And
I do.
He seemed to be the adult in the room in a lot of ways.
In many cases, yes, he was. But not understanding the short term or the implications of interest rates to the economy, I think, is his downfall.
Yeah, because when you and I talked about it, I said he's not lowering rates fast enough at the time, and now he's done it, and it's slow. It's not methodical. It's not a way. Okay, you know what? If we're going to get to here, he continues to say that every single time is meeting by meeting decision.
That's right.
Show us a plan, and I think that's what Kevin Warsh is going to do. He's going to say, you know what? I'm going to lay out a plan for us. Here's what we're going to do. And dear Fed, the rest of you on this panel better get on board, right?
I think so, Steve. I think your market's open right now, but
it is open, yeah.
Eliminating forward guidance, he'll lay a plan out and then move back into the background. Go ahead, Steve, with your open.
Yeah, I don't think there's much going on. It's pretty quiet. I mean, obviously, Bitcoin here, 78,200 here. I've got the charts up here, and silver, I was expecting to see some serious silver moves. Serious silly silver moves. It's a tongue twister if you want it to be. It's not happening either, right? So I think that maybe the markets are starting to say, okay, you know what? January was volatile. February might not be. I think that's going to be the case.
But Steve, let's talk about silver. Yeah. That's a historic move. And for the viewers, I think Steve and I would echo, when you see anything, any financial market, when it moves in a historic fashion, you've got to start looking around for, are all the shingles still on the house? You know, is everything still intact? Why did silver come down? Well, people want to say that Kevin Warsh was a hawk, and that was not what the market was looking for. And maybe inflation does get more under control. Inflation has been under control. So when people try to assimilate Kevin Warsh's announcement to silver and gold coming off, I'm like, no, that's an easy narrative. That's an easy headline. What about China? What about everything going on in China? They were offering margin of 40-1 to get involved in gold and silver. There is one of the leading speculators that has disappeared from the country. He's left the country and left a couple of $100 million in debt. What about, all the implications of is China, were they driving? Because we all know Asian purchasing of gold and silver has been well documented as part of this rise up. So I think there's an awful lot under. Then they talk about the short positions, perhaps in the banking community, and an engineered route here, because it all started before the markets opened, back when who controls the market pricing. There's a lot left on the table to discuss in silver. And, I'm not so sure that, I just want to leave it at a Kevin Warsh announcement.
And you heard that over the weekend, a lot of speculation in tinfoil hat about JP Morgan engineered this sell-off, and they were the ones who pulled it off, and they knew where to pull it off at. But if you look at silver from $19 to $80, that's still a 4x position, right? And it went from 20 to 120, so 6x. It makes kind of sense that the pull off, just common sense, which I think I made a post over the weekend. What's missing in this market? Common sense. We're not seeing that in this market, right. And oversized positioning. But I think silver goes right back up because the narrative still hasn't changed, right? There's still a need for it. There's all the things that the narrative has. But the question mark is, why silver, not gold? Why silver, not Bitcoin? Are they going back and forth? Who are the players in the game? And I don't think any of those questions have really been sussed out yet.
That's correct. And that's my point, Steve. Exactly. Yeah. And, as to, banks, the big banks, they have big hands, but they have a huge client base. So there's a natural tendency for them to be as big as people talk about in the marketplace. And their risk management is pretty bang on. So I would doubt that I would not doubt that some people, players, investors in the marketplace, even some of the miners, may have gotten themselves caught in short positions.
That's what I think.
Yeah, I mean, that anytime you move like that, we've talked about this on so many of our shows. When you move in some meteoric move like this, of course people are caught. It's not.
And you look at it from that perspective, you've got a lot of major silver players that need it, like EV companies and things like that. They need silver, phone companies. Were they going at 120 going, I can't wait to buy more? Or should I buy at 100? Peter was saying that there were companies saying, should I get contracts at 150? Like, wait a minute. Even major companies were going, should I, what I do here, right? They were not prepared for this. And I think that's another reason why we had oversized moves.
Yeah, two things, Steve. One, when you drop a giant rock representing the silver move into a pond, the ripples go out. They hit the walls and the ripples come back. And when the ripples come back, that's why I don't think the silver move is over yet. I do think it could trade up. I'm not touching it. I caught some of the move like when you talked about. I did catch some of the move down, but I'm not touching it right now because the ripples are going to come back. And when the pieces begin to fall, you could still see it trade lower. That's one. Two, the physical gold versus the paper gold. The paper gold is what dropped.
Right.
Where is that relationship? And I heard some things over the weekend, and I said, let me go in and try. So I'll urge all the viewers to do the same. If you buy physical silver from wherever you buy it, go into it today and try to find out. Let's keep it simple. Look at the price of a 1 ounce 0.999 pure silver eagle. Or, take another country and look at their silver. What's the price of a 1 ounce coin? Now, there's naturally a markup to it, but some of the markups are still at 105, 110. I found a couple that are 89.95, but still the markup still is much higher and has not absorbed. Like, why can't I go in and buy a silver coin at 85? So here's my big worry. These future exchanges that trade paper. If somebody came in, they say over 2 times the annual silver production traded on Friday. Okay, understand that. What about if you go into a futures market and say, I want to buy 100,000 ounces of silver. Maybe, why don't we say 500,000? Because at 85, it was 120.
Yeah.
And what about if you say, I want to take delivery?
Yeah. Can't do it.
Why can't we do it? You're allowed to.
According to Peter, we're 2 months behind now on a delivery.
So this is where my big problem in silver is.
Yeah.
You would bankrupt an exchange.
Yeah.
And
that's also why CME has also raised margins so much too.
Yeah. They've raised them, to the point now where basically the retail can't even get in there.
Right.
Because the amount of money that you have to trade. But that is a protective mode to protect who? Themselves. And it really shows a lot of cracks and flaws in that marketplace. We will find out in the weeks and months ahead, because somebody's going to look at it, because the shoe is going to fall soon on who, what happened.
Yeah.
And that's my biggest worry right now. And that's why I'm staying out. I am long physical, but I'm staying out of that market right now because something is not right. Something's rotten. And the COMEX is going to have to come clean here. You cannot trade over 2 times the annual production of silver without having something that we're not all privy to.
During COVID, oil went negative, right? There was mistakes here being made. So is this not going to be the new norm here? 82, it's like 82.30 now for silver. I just had it up there. For those of you, what Steve's kind of talking about here, gold, silver, there we go. Gold silver ratio for you. This is the gold silver ratio now is 57.94. Where would that be in the relationships? Gold silver relationship. There it is. Meaning that the price of gold over silver divided by silver during COVID, it went to 120-ish. In the 52-week range, it went to 107. And this is what happened when silver took off. It got down into 40s. It should be averaging 90. That's about where the average is, somewhere in here. And we didn't see that. So this gold to silver ratio should equate again. And that's another reason why I think we'll start to see silver push back up. So I'm concerned, but I'm also going to see gold prices too. But I'm not too concerned about this. I think we do go right back on up.
I would think that's the obvious play here, Steve, that silver makes a move back up and narrows that gap. It's got to, because silver has industrial demand. And
right.
If we're talking AI and we're talking, solar, which many people are saying, why does China have such a huge energy surplus over the US? Because of their solar development. Then how could silver be down here? So these are the things that just don't make sense. When something doesn't make sense, I like to keep analysis very simple. If this brain up here doesn't come out with a simple answer, whoop, I back off. Yes, I am long physical silver.
Okay.
I'm not playing SLV or anything right here because I don't trust what's going on.
And I actually am. I'm actually long AGQ, and this is why. You can see the buying now happening. There's a kind of gave me some clear signals. Now, I was asked earlier by Howard, is this a trade? Is this I mean, obviously a 2X is a trade for me, right?
Yep.
But I also, you know, over the weekend, I was asked if I'm going to buy more silver. No, I don't want physical silver right now. I had a whole desk full of it for 2 years. I held on, made the money. So for me, this is just a trade back to norm, and we'll see how that goes. Bitcoin now 78.7 now. You can see a nice little pop back up. There was definitely liquidation. And look at the liquidation. This is a 1 hour chart. Yeah, this was very manipulated. You can see it happen in the middle of the night on the overnights. Yeah, that's what I think. I think the dailies are looking at.
You just nailed it. When things happen overnight in the futures market, markets that most of us cannot access,
right? You
have to be very suspect and look at those bars. That's not normal.
No, that's not normal. No, it's definitely not normal. And when you think about it as a perspective of history, it was really way out of whack. And that's what I looked at. I didn't look at what I saw on Twitter, right? Because Twitter was just full of it. Yeah. We're hearing now that U.S. envoy Witkoff now will travel to Abu Dhabi for talks with Russia and Ukraine Wednesday and Thursday, according to White House officials. Now that to me tells me that things could be quieting down a little bit.
Well, you had Russia come out and say they won't bomb their oil refineries and things, so that was a huge positive.
Well, because they want that oil, right?
Yeah, yeah, and you know, this is going to be round two. I think the odds are you're going to get a peace deal here out of the Ukraine and Russia, which is going to be very good for Europe in a sense, because it's going to create a lot of rebuilding of the Ukraine, and it will primarily come out of Europe. And that's a good thing. Remember, criticize your Trump, no matter what side of the aisle you stick on. He was very clear in saying a strong Europe is in the United States' interest. If you get peace in the Ukraine and Europe becomes the engine of growth into the Ukraine in rebuilding them, utilizing a lot of this frozen assets of Russia, this is a big positive for.
But Ursula over the weekend said they're bringing more sanctions against Russia.
Who did that? Europe?
Ursula de Leyen.
Yeah, I think because they really, they're trying to flex their muscle as well.
They don't have any. They don't have any money.
Yeah, keep in mind there's only 3 people at the table in Russia, in Abu Dhabi, right?
Right.
I mean, Europe is basically in line with the United States thinking. Why do I say that? Because we went in there, everybody talked about we're going to invade Greenland, and hours after his speech at Davos, NATO came out and was like, boom, yeah, we're all in line. NATO's going to do a much bigger presence in, everybody is in line. Stop with the negatives that, the market loves to throw the negative narratives out there. Everything that's happened since this guy meets with people, and I'll bring it back to China, he meets Xi, they're cordial. Suddenly, the Chinese military loses its top 2 people who are both friends of President Xi.
Yep.
And everything that's been coming out from United States and China since that meeting has shown much more of an agreeable stance. So I am so positive once I get through the May period, April, May, to the situation in the world and growth. And I think a Russia-Ukraine agreement, which is leading that way, is going to be a big positive to financial markets because it takes the geopolitical out.
Hearing now reports that the next Netflix Warner Brothers shareholder vote on the Netflix deal will be likely held in March. So that's moving pretty quickly there. All right.
And earnings, Steve, have been pretty good so far. I like the whole situation, but I will say I am going to hold my volatility index because after this silver move, I'm worried that we're going to see some splintering in other markets. These things usually don't happen in isolation.
And this is a 1 hour chart of the VIX itself, and it's got higher bottoms.
Yeah.
That's not normal.
That's a bingo. And you've been echoing, you and Howard have been echoing this for probably 3, 4, 5 months about, why isn't it, beginning to percolate back up? It's a hedge.
We're seeing now that January final S&P coming numbers, PMI number 52.4 versus 51.9, expected 51.8. So that's PMI numbers are good there, huh?
Good, and out of Europe as well, and out of China as well. So, you got to step back from the narratives that we always hear day to day, and you got to look at the data. Gently, we're beginning to see kind of a basing in a lot of the situation, and the United States is leading, but others are beginning to catch. I mean, China still ran $1 trillion trade surplus last year.
Yeah.
What happened to all these trade negotiations where tariffs and things that they were going to not happening?
Right. And it just seems that, let's scream bloody murder, and then when it comes down to it, nothing really happens. It's just maybe a little bit of a move to the right direction.
Right. And don't miss your focus on investing. You can trade day to day. And when you do, Steve, you're a perfect example. When you're trading, boy, your attention is on that screen. But if you're investing, then you've got to, you got to step back a little bit and look. I think that there's a theory coming out of Kevin Warsh that the Fed has been strangling growth in the United States, meaning every time growth gets up around 2.5, if we perk up to near 3, the Fed goes, I'm worried about inflation.
Yeah.
And they start strangling the liquidity in the market.
We know that firsthand here.
Why?
Sure. Okay, let's get to it. Disney didn't really have great earnings. They did say that they are moving into India with TB stake, and the parks were a little bit down here in the States, but were up in overseas. Disney's down 6.37%, but really not below the 100 handle and not above the 115 handle. So we're really in a trading range here. And with Bob Iger saying he's going to step down again, it's the 3rd time, right? Is Disney just dead money?
They're a cash cow in the sense that people go to their parks, pay money. You have Disney streaming, you pay money on a monthly basis. I don't think I think it's kind of, Steve, a sideways type of move. It's a great company. But I'm not really looking for an explosive growth on the upside. When they said people going to the parks were down, okay, that's looking back into the 4th quarter. Government shutdown. Everybody's concerned about tariffs. People are watching their pocketbooks. I mean, sure, of course, it's an expected result. I'm sure that'll pick up again once we get into the 1st quarter and get the next quarter results come out. But I don't think it's an explosive move to the upside, other than unwinding any shorts that are in the market.
And we're seeing silver still slipping here under the 80 handle now again. So it seems that there are people out there that are, All right. Solana Metal, Tesla getting smacked again this morning, but pulling back up. It's no longer a car company, according to Elon Musk. I've said that for a while. I think that's the case. I think he is moving everything to robotics. Doesn't like his numbers on sales in Europe, obviously, because they're not selling in Europe. You gonna have a robot in your house there, Steve Flanagan?
I would, but my wife would never allow one. So it ain't happening in the Flanagan household. But I think of the practical applications. This is where technology is moving. It just continues. I put everything under the banner of increased productivity, and this is just another area. It frees people's time up to do what people want, and I think that's the wonderful world we're moving into in the next 2 to 4 years. Tesla will probably be, now they're talking about keeping SpaceX underneath of the banner of Tesla. That rewards all the Tesla shareholders. I think that's probably what's going to happen. And I think looking out into the future, Tesla will be your first $10 trillion company.
Ooh, okay. I like that. I'm going to pull it up here. This is a monthly chart of Bitcoin. I'm going to try to pull it up. There we go. My numbers are still right on target. It seemed like the selling in Bitcoin got a little over its skis, and I think that's why we're seeing this pop back up here. Silver once again is really struggling up here at the 80 handle. This seems to be that some sellers at the 80. Wow.
Steve, that's a great point you brought up is when you talked about gold, silver. Gold has always been the asset of stability and safe haven.
Yep.
If we go back to the crypto market, Bitcoin in particular's highs, everybody was saying Bitcoin was a safe haven play, right? Because it kept, okay, well, that's unwound. And then it was silver and gold has always been, but when something moves as much as it moved, it erodes the asset of stability.
Yeah.
So, I'm a king dollar guy. I do think that the dollar is going to totally fake everybody out this year and is going to go up into a gradual upward trend. I do think we could see back up to 102, 103 in the dollar index. And I think what's going to happen here is I think underlying my theory is Kevin Warsh is going to be stability. And everybody said, oh, you got to get out of dollars. You got to get into the, India and China, the BRICS nations. Well, Venezuela took out the dollar being substituted for oil, right? They were beginning to trade with China and other currencies. India and Europe could be, but I think that the dollar is going to be a sneaky Pete type of move here that begins to bring back the asset of stability. Now, that's going to play out over a period of time. That's not a today trade, but I think you want to watch this carefully. If the dollar index has bases here, begins to make a move back above 99, that's a key first level that we got to watch, then you could begin to see that the dollar begins to bring back some of its lost reserve currency stability aspect.
So 99 to 102.50 is about what you're saying in this area right here.
First level is 99. That's going to be a critical level to support my theory. I'd have to see a break over a period of time, and that may not be until, in March sometime, because I think this move is gathering speed. Remember, the market is overwhelmingly bearish.
Yeah.
So you'd have to break that type of scenario first.
So I'm going to put, Flan says 90, said 99.50, right?
99, what we call the figure 00 is really my level in the sand here. I'll zero in on Wednesday, maybe give a more precise level to that.
Okay.
99 is what I have marked down.
Zeroing in on Wednesday. Got it. All right.
Oh boy, holding me to it. That's it. Love it.
That's the whole point of it, right? That's the whole point we're doing here.
Yep.
Because I think the problem then a lot of times is a lot of companies just, out there, they're just screaming, oh, buy this, buy that, sell this, sell that. Okay, we're now seeing silver getting smacked a little bit here.
You got to have accountability, which then gives credibility. And Steve, I know you drive that every day on your on Quasar Markets. Credibility, accountability. You put on really good people. I love the guy who talks metals. I forget his name right now, but
Peter Thomas. Yeah,
Peter Thomas. Yeah, these guys. He's been spot on. So
Yeah, and I think that's it's missing in the markets, right? Is people that actually know their stuff, and it just seems like the oh my God, you can't believe what happened today in the market. Stop, it's the emotional trying to get eyeballs, and look, everybody's trying to get eyeballs. That's nothing unusual, but how we do it and what we do in order to make that happen.
Right.
All right, Steve, it's about almost 10 o'clock. What's your thought process going into the rest of the day? Look at that sell off.
I think we have Bank of England, and we have, let's bring it a little closer. Tomorrow, we have RBA, Reserve Bank of Australia.
Yeah.
And there's a chance, they're at 3.6%, and there's a chance that they may raise rates. Why? Because they're having a battle with their inflation. And they are a commodity-based currency. That's how we've always referred to Aussie dollar. So watch that they begin to raise rates, which could send shockwaves through the marketplace, that the first rising of interest rates. And that could be something to watch. I expect nothing from Bank of England and nothing from the ECB, although the ECB is going to be a little bit scared of the test above 120 that we saw in the euro dollar, because they don't want a strong currency while they're trying to come off of 0% growth. England, the same thing. England, UK, I'm a little worried about them. They should be cutting rates, but they're not. They're going to pass again.
When the euro was first made, the idea was it'd be close to parity to the US dollar.
That is correct, Steve. It was, the idea would be parity, and it's been anything but. We've had moves down into the 80s.
Right.
And you've had moves up as high as in the 140s. I think we're even higher than that. I don't have my chart in front of me, but I think we were up in the 150s, actually.
Right.
As I said, if I take 25 years of trading in the dollar index, its midpoint was like 96.80. Midpoint of 25 years of trading. So when everybody's getting all tied up in knots about the dollar declining, I'm like, you're at the midpoint. What's this big deal? And if you have a vision of the future, which I believe my thesis rests on, with the United States and technology,
right,
then this is a great buy level, 96.80, and that's why I gave you the 96.20 point of I was very concerned, dip below, but once we came back above it, I reestablished.
And if you think about it, when the euro was established in 71, it took almost, I don't know, gosh.
The euro was 1999.
99, yeah. But when you look at the protection of it, let's talk about that for a second. So it's really in the midpoint of where it's always meant to be, right?
Yeah, the midpoint in the euro dollar is a tad bit higher, but not that far away.
Right.
And yeah, I mean, stability. I remember you've got 28 member nations.
Right.
So, they took all of their currencies and went bang and said, here's the euro dollar. Probably quite unfair on Germany.
Yeah.
Especially on the heels of when East Germany was absorbed by Germany, the Ostmark and the euro and the German mark, had an obscene exchange rate, but that was Germany's effort to embrace East Europe. Germany's had, and if you look at the comments that the new Chancellor Merz has made in Davos, he point blank said Europe has failed.
He did.
And Germany is going to lead them back out. And that's why, I'm such a negative on Europe. But I've actually begun to say, if this guy begins to get the majority, he's got a very slim coalition government, and he's got a very strong group against them.
Right.
But if he starts to adopt a Germany first policy for Europe, that could really turn big things around in Europe. Anyway, something for future discussion. But keep it on your radar. This guy, Merz, Chancellor of Germany, watch his comments more and more in the future.
And the Deutsche Mark is coming back, going to make a comeback here, you think?
Well, I don't think my long-term theory has always been that Europe will decline and collapse again, and the European Union will fall apart again. You know, if you go back in history, it always does, because politicians put it together, not realists. But this time around, I'm not so certain, Steve. Maybe, you know, a pivot in Europe could be a very positive thing for Europe.
Okay. All right, Steve. Well, it is 10 o'clock. Let's get to it. The top of the hour, and we'll see you right back here on Wednesday, my man.
All right, Steve.
From all of us here at Quasar Markets, thanks for turning in, and appreciate all the numbers. Wow, good numbers today. Appreciate all of that. We'll see you a little bit later.